To know more about option trading, subscribe to Option Trader.
Good evening, everybody. Let's review the market of today. Prior to that, we have to go into the pre-open market data analysis. That analysis will update you about the what is going to happen in market. If you look at the pre-open data of the market, we find that in coal side, strike price 20,000, 19,800, and 19,600 were having maximum open interest. If you look at the numbers, on 20,000, 83.24 lakhs contract was there. On 19,800, 82.45 lakhs contract was there. And on 19,600, 80.22 lakhs contract was there. If you look at the meaningful call writing on the strike price, we found that 19,600 with 33.98 lakh contract, 19,700 with 22.55 lakhs contract, and 19,500 with 19.96 lakh contract was having the meaningful writing. In case of call unwinding, maximum unwinding was seen on strike price 20,200, where 1.77 lakh contract was wind up, and on 18,500, 0.1755 lakhs contract was wind up, and on 18,300, 0.149 lakhs contract was unwinded. In case of support side, if we look at the put side, we find that the strike price, which was having maximum open interest, input side was 19,900, 19,500, and 19,400. If you look at the number of contract on 19,900, 80.38 lakhs contract was written. On 19,500, 78.51 lakhs contract was written. On 19,400, 57.13 lakhs contract was written. If we look at the meaningful put writing, the strike price where we found noticeable writing of the put up in put writing, that was 19,400, 19,700, and 19,300. So 19,400 with 19.17 lakhs contract, 19,700 with 11.52 lakhs contract, and 19,300 with 9.8 lakhs contract was having the maximum put writing. And in case of put unwinding, 19,700, 19,600, and 19,800 strike price were important because 19,700 write off 7.67 lakhs contract, 19,600 write off 6.6 lakhs contract, and 19,800 write off 2.27 lakhs contract. This was the scenario of the market before market open on 23rd October. If we look on the data, it was looking that if we look at the resistance side, so the resistance, although maximum resistance could be 20,000, but the resistance which can be witnessed in the day could be somewhere 19,600 and 19,500. These were the two level which was supposed to be resistance. 5,000 was also good candidate for being the resistance. In case of support side, 19,400, 19,700, and 19,300. These were the important strike price where support can be in the day. But we have to wait for the market when market open, and then we have to analyze the data. And on the basis of that, we can fix up what we are predicting on the basis of data, whether that is going to be true or not. So we have to wait for the market to open and settle down for say 15 to 30 minutes, and then we see what data is telling. Whether the scenario and the situation of these levels, which we are estimating on the basis of option chain closing data of say Friday. So this was the scenario. In nutshell, we can say that 19,600 and 19,300 were two important figures. If market have to be there, it will be within the range of 19,600 and 19,300. So market was giving an impression that the range of the market for today may be 300 points. So this was pretty clear from the data that market will move in a range of 300 points, but we have to make it sure when market opens and in what way the writings are coming up, that we have to wait for. And once we get the data, only then we will be able to analyze and summarize this data for the purpose of predictions of the level. Market was moving in range from 20th October. On 23rd October also, market opened in the range. The first candle, if we measure the high and low first candle's low was 19,517 and high of the first candle was 19,552. After that, we observed that initially market was giving a bullishness indication because there was a confusion in the resistance side. The volume of 19,500, 19,550 and 19,600, they were having identical volume. So it was looking that market will go towards its extension of resistance. But we observe that this scenario is not going to continue. And the reason was this, that the change in open interest on the respective strike prices is started showing a different story. Put side change in open interest is start declining, and it proven the market that it is going to be bearish. If we look at the put side, we observe that open interest has become weak toward bottom at 19,000. So the support was going down in a downward direction. In morning, if you look when market opened, the resistance support was strong and resistance was moving. And it was looking that market will go up, but later on, the resistance became strong and support started moving toward downward direction. And this downward journey continued throughout the day. You see, market start declining at 10:05 a.m. and it reached its extension of resistance. Rather, it breaks its extension of resistance, and it continued its downward journey. 19,556 hold the market for a long period. Roughly, if we see from 10:10 to 12:45, 19,456 was controlling the market. This was the scenario when resistance and support both was on 19,500. So extension of support was supposed to be 19,517 and extension of resistance was supposed to be 19,483. But market skid from here and market rest on the 19,450. So the value of 19,456 was found, which was most of the time controlling the market. So from 10 a.m. to 12:40, or rather we can say up to 1 p.m., the market was within the control of this strike price. If you look at the moment of the market, you will find the market was moving 10 to 20%, rather than 10 to 20%. After 2 p.m., market was merely in the range of 14 to 15 points. And if we look the range in which the market has been, it was 19,456 to 19,490. This was the range in which the market traveled most of the time. And by 1 p.m., we saw that there was a confusion in the support side. The support side volume shifted to 19,400, and later it became strong on it and then shifted to 19,300. The pressure was observed in support side. If you look at the OI chart at a different strike price, we observe that strike price from the very beginning was giving an indication of bloodbath. Because if you look at the open interest in 19,600, 19,550, 19,500, 19,450, we saw that they are not going to support the market. 19,450 was controlling the market for some time, but by 1 p.m., it has also surrendered the market. And both these strike price, if we look below them, up to 250, the support size was not able to control the market. We was observing the market to the extent of 19,250. If you look at the strike price on these different price, you will be able to understand that how market was moving, how open interest have change in open interest curve has already predicted the direction of the market. And by the end of the day, market has made a low of 19,256, and from the 19,256, market take a reversal and market reached to the 19,278 level. But still, if we look at the data, if we look at the moment of the market, it looks bearish only. It indicates that market on Wednesday may also start with the bearish sentiment. But it is the stock market, nothing can be predicted with very precision because it is market and nobody can predict market well in advance. Yes, in the open market with the help of data, we can predict it, we can find out the levels, and we can understand the directions in which market will move. But merely on the basis of past data, we cannot make any prediction about the market. If we are making that predictions, so that can be theoretically okay, but practically that is not going to give us a solid reason to believe in the values what we are getting on the basis of post-market analysis data. In fact, the right time to analyze the data is when market open and the open interest and volume in the market got settled down. Roughly 9:30 or 10 a.m., that is the right time where you should think about the market direction and market moment.